Now, for starters, what is the BBMA strategy? Now, the BBMA strategy is a very, very powerful strategy founded by Omar Ali, and it is a combination of Bollinger Bands and several different moving averages, using each indicator's power to provide a comprehensive and robust analysis of market trends and patterns. Now, this strategy itself is based on the principle of combining trend following and momentum indicators to generate precise buy and sell signals. Now, the main indicators used in this strategy is Bollinger Band and 5 moving averages. Let's talk about the Bollinger Band first. Now, in the BBMA strategy, it is very important to know about the Bollinger Bands because it is a very powerful tool and it is very important in the BBMA strategy. Now, the Bollinger Band gives us two directions, which is the horizontal and the vertical. The horizontal is when price is more of ranging, while the vertical is when price is trending. In this case, we can see a bearish short-term trend. Also here we can see a cluster. So these Bollinger Bands act as dynamic support and resistance in the BBMA strategy. Each time a candlestick closes outside the Bollinger Band, then a setup is about to occur. The Bollinger Band also has 3 segments, which is the top Bollinger Band, middle Bollinger Band, and the down Bollinger Band. The top Bollinger Band being the resistance, the lower being the support, and the middle Bollinger Band being the divider, differentiating the top from the bottom. Now that we know this segment, let's add the next indicators, which is the moving averages. So we start next with the moving average 50. Now, the moving average 50 in the BBMA strategy is just for identifying trends. So once candles are above the moving average 50, we are in an uptrend, whereas once candle is below the moving average, we are in a downtrend. The moving averages 5 and 10 are basically for entries, re-entries, exit signals. Those are the purposes of moving averages 5 or 10 high and low. As we can see here, the moving average, let's zoom in. This is the moving average 5 or 10 high, while this is the moving average 5 or 10 low. So their basic function in the BBMA strategy is just for entries, re-entries, exit signals. That's it. So I want to use this medium to talk about the conditions in BBMA strategy. So the first condition we are going to be talking about is called the extreme. Now, what is an extreme? It's simply when the moving average 5 high closes above the top Bollinger Band in an uptrend, while in a downtrend, the extreme is when moving average 5 low closes below the bottom Bollinger Band. Once we have an extreme, there is a place we must take profit. In the uptrend, if our extreme shows, our take profit must be at the moving average 5 or 10 low. Now, one thing to keep in mind is that the extreme is just an early signal that price is going to change direction. And for us to confirm and trade our extreme, price must close inside the Bollinger Band back. As you see here, the price closed inside. So we take our sell position for the extreme, stop loss slightly above, and take profit moving average 5 or 10 low. So now that we know the extreme and the must take profit zone, the next thing that is going to occur is the MHV, and the MHV is called loss market volume. This simply means that price reverses but could not close outside the Bollinger Band, or could not close after a momentum candle. As you see, price went this path after the TP but could not close above the extreme nor a momentum candle. So we mark out our MHV zone, then place our sell order slightly above the Bollinger Band and our TP moving average 5 or 10 low. Now when MHV occurs, there are retracements that must happen. Like right here, MHV occurred, went down, price retraced back. That is where we enter our trade. Now the next condition that is likely to happen is the CSK direction. That is the CS direction, candlestick direction. Now this is when a candle closes over the middle Bollinger Band. Now as we know, the Bollinger Band has three sections: the top Bollinger Band, middle, and the lower. The top acts as a resistance, the down acts as a support, while the middle line is the divider differentiating the top from the bottom. Now once a candle closes over, for example, when a market wants to change trends to the downtrend, a direction candle appears, which we can see right here. This candle closes over the middle Bollinger Band, and this makes it a CS directional candle. So once we know our CS directional candle, price usually makes a retracement or creates a momentum. And as we can see, price made momentum sell right here. These zones showed that price closed below the lower Bollinger Band. Now momentum sell is when price a candlestick closes below the lower Bollinger Band. While in an uptrend, as we can see here, price closed above the top Bollinger Band, making this a momentum candle. Now this is not always the case because Bollinger Band has two directions, which is vertical and horizontal. Once a momentum candle appears in a vertical direction, that is when it is a confirmed momentum. So once a momentum occurs, a retracement is going to happen to a moving average. In the case of this downtrend, a retracement happened in the moving average 5 or 10 low. That is 5 or 10 high rather. That is going to be our re-entry spot. So we take our sell position, stop loss slightly above the middle band, then our take profit 5 or 10 low. We go on again, price makes another momentum, creates another retracement to our re-entry zone, then we place our trade again. Now, as far as price did not close over the middle Bollinger Band, we can continue playing with the retracement. That is, we can continue entering price retracement. Once price closes over the middle Bollinger Band, then it is another direction. Like in the case of this bearish trend, we have been taking re-entries. Price closed above the middle Bollinger Band, changing its direction to an uptrend. Now, when it comes to risk management using this strategy, it is very advisable to know how to manage your money so you'll be able to maximize your profits in the long run. It is also advisable to multi-time frame when using this strategy, as entering in one direct time zone or time frame might not be conducive enough. If you can be able to analyze from the daily to the 1 hour or the 4 hour to the 15 hour, it is going to be a very, very good way to understand and know market trends. It will also give you better entry signals, and it is very, very good for taking precise trades. The conditions, if you want to learn more, watch the video I dropped earlier on, the link in the description below, or you can tap the screen and watch the video to understand in-depthly on how I use this strategy to maximize my profit. Now, I hope this strategy is going to be profitable for you. Remember to like, subscribe, comment, and tell me what you don't understand about this strategy so I can explain further to you. Because the issue with this strategy is that most people don't seem to understand it. In that case, I also dropped a PDF for you to read so you'll be able to understand the strategy very well. Free. Click the link in the description below. May your trading journey be prosperous and may you using this strategy profitable. See you in the next video. Peace.